First up on this edition of India Tonight, let's talk about the markets and another day for the bulls. On Dalal Street, the Nifty has closed above 20,800. And yes, it has outperformed the broader indices. Stocks like Adani Enterprises and Adani Ports, the top gainers in trade today. And the Bank Nifty also managed to scale record highs in intraday trade. The energy pack was the top sectoral gainer. It was followed by the metal stocks, and the public sector banks were in action as well. But on the other side, we saw the losing stocks among the IT pack, the realty pack. Also, some of the FMCG names came under pressure today. But now that we've seen the sharp run-up in the broader markets, is there a case to move to large caps from the small caps and mid caps? We got in some of the biggest voices to speak about this. This is what they're suggesting.
I feel that, large caps will also do well here from here on, because if the money comes, which it will, even from the foreigner, given the sentiment and given the overall stability, then the first round of money will come in large cap.
So I think there is still an opportunity in the large caps. Not to say that there is no opportunity in the small to mid caps, but I think in a bull market, there's always sector and market cap rotation. So my sense is that, at least in the run up to the elections, you may now see some of the larger cap stocks which have moved sideways should also start to participate.
The larger cap financials is the easiest to buy. They're also a large part of the index. So even if these guys underweight, overweight, they still have to put if 30% and 25%, but all that has to go into the same large cap names. And within those three groups, which is financials, consumer, and IT, it is easiest to buy financials.
The return of FIs, and I think that is going to be a big catalyst for the market. Many people make a statement that the retail is the only element in the market that matters. Retail has caused us to reach where we are. FIs will cause us to move ahead from where we are because they will now, there's likely to be participation, particularly in the large cap names, which is what the market is seeing in the last week or.
We have one market voice joining us now, the Managing Director and CEO of Sundaram Mutual, Sunil Subramaniam, back with us here on this edition of India Tonight. Always great to have you. Mr. Subramaniam, these markets, clearly they are on fire. It's easy to lose your way if you're a budding investor. Then what is a sane strategy, if you could suggest, especially when it comes to large caps?
So I would say that the index is the best representative. What's happening is that you saw in the months of September and October, FIs pulled out money in a big way. The market didn't fall too much because domestic buying was continuous to support that. Part of that money was because then oil prices were rising. But since then, what has happened also, you see, is that the uncertainty around the December 3rd results, which was keeping a few of the FIs on the sidelines, has now cleared the path for them to come. Because continuity of policy, I think, is one thing which this December 3rd result has delivered. Because now the doubts around the government coming back to power are at ease. And so you'll see a lot of the money which was on the sidelines for three reasons, right? One was the uncertainty around the continuity of policy. The second was the fact that in that time, the oil prices were rising. Since then, we've seen Venezuelan oil come in, restore the supply situation. The OPEC's decision to cut the price doesn't seem to have found cut the production doesn't have found broadward support. So oil is expected to be stable. And the third fact is that in the US, rate cut is being strongly pitched in the second half of the year. So from that perspective, liquidity heading towards emerging markets should be, turning even more higher. So these are all factors. And if you see, because of the September-October selling and the fact that domestic buying has been continuous, the share of FIs in the total stock market in India has dropped to its probably a 10-year low of 16.5%. So I think that there is enough scope for everybody from a short-term FII to a longer-term FII to allocate more to India. And when that comes in, you see, India is still perceived to be a risky country because it's part of the emerging market pact. So there's a search for safety. When an FII comes to a risky market, he doesn't double down on his risk by getting into very strong cyclicals or small and mid caps, right? So they tend to hug the index. And if you see ETF flows from the foreigners, the last 3 years have been dominating flows into India. So from a perspective of the large cap space, it's best to stay around the index stocks and around large cap funds, which have a small leeway vis-a-vis the index because they can overweight some sectors a bit more. But I would say that broad-based rally in the large cap. When I say broad-based, I don't mean market cap broad-based, but sectorally broad-based within the large cap space would be the best strategy for investors to adopt. And I think if they want to go beyond large cap funds, then flexi cap funds represent a good option because they have normally about 15 to 20% or maybe up to 30% in the broader market. So they could give a good balance between the large cap growth and picking select good quality mid cap stocks too.
Fair enough. So that's a good strategy. Large caps is where the action from the FIIs is largely going to come, and perhaps looking for a slight bit of sanity when it comes to taking risk. Perhaps that is what is going to push them in that direction, like you pointed out. But broadly speaking, with the general elections in mind and the possibility of a slew of populist measures getting announced ahead of them, Mr. Subramaniam, even some tax relief perhaps in the interim budget, how should you strategize with the sectors that could get a leg up from now to the full onset of electioneering?
So I think two sectors should dominate the short to medium term flows, which is one is consumption. Like you mentioned, populist measures. If you notice, one of the things behind, let's say, a Madhya Pradesh election was this Ladli Behna. So it's some way of populism in a way, but directed. So I think that similar schemes are probably likely to come from the center also. They are seeing the success of it. So consumption as a basket. You see, what's happened is that so far consumption has only shown growth at the premium level. That is higher end SUVs, 7 lakhs and above, bigger houses. But the affordable housing, the entry-level cars and scooters, festival season saw a pickup in demand, but there's a lot to go for because the full recovery post-COVID hasn't happened in the broad consumer goods segment. So I think with the liquidity flowing in and populist measures, consumption is one which has in the past few months probably suffered capital at the cost of infra story. While the infra story will deliver in the medium term, in the short term, there is a valuation-based pickup in consumption because those EPS numbers come January results are going to show up well. So I would say that's my number one pick. The second pick following that would be the banking and financial services sector because of the fact that you have, I think per capita income has been pretty healthy. Population will lead to banks lending also going up. I know that there has been a bit of a dampener in terms of the capital adequacy required for retail loans, but I think good quality banks and good quality NBFCs would easily absorb that in their stride and would show strong growth in market share and numbers. So I think banking also as a sector, because post the RBI regulation, there was some profit booking and taking there. And notably there, I think good quality public sector banks, because they have a large CASA base, they have a good reach across India, and hence the populist measures should ideally flow into deposits into the public sector banking system. So I think good quality public sector banks would probably take the lead. So this would be my picks from a election and immediately thereafter perspective.
Consumption, banking and financials are the sectors you favor from an election standpoint, but lots of action in the primary markets, Mr. Subramaniam. What do you do with the IPOs that have come our way already? Those that are on the way, sometimes you realize there is a lot of froth, a lot of hype, and valuations could get very stretched. And this you realize only after the listing happens. So how do you account for these factors when zeroing on the kind of participation you want in IPOs?
So I would say that there's a simple thumb rule that I like to use, which is very simple. Is the capital being raised to fuel growth in their business, or is the capital being raised to pay off the private equity and other players who had initially invested in those during a pre-IPO phase, right? Because they had invested 4 or 5 years back and their takeout is the stock market. So I would be wary of those because that's just, they are seeking to list the company in order to make their gains, right? That money is just passing from left hand to right hand. Whereas those companies that are raising capital to fuel their growth, even if a portion of this money is going to fuel their growth, I would say they are a better bet from an IPO. So simple thumb rule on IPOs, look for companies raising capital to fuel their own growth in the market space, either gain market share, expand geographically outside, all of those kind of things. Look for those kind of triggers to choose which IPO to invest in.
Always a pleasure getting in your perspective, and this is going to be very useful for our investors. Thanks indeed for joining us, Sunil Subramaniam, on India Tonight.